What's going on, guys? Michael here, Daily Energy Market Summary here on the world's greatest website, oilandgas360.com. Here on this gorgeous Thursday, October 8th, 2020, episode number 134. We are kind of live on YouTube from an undisclosed location here in Washington, D.C. I'm on the road again. I can't wait to get on the road again here in D.C. for a little slight vacation, slight work trip, so we're making it work out. As always, I'm your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, and international man of mystery, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, Michael, and say hi to all the folks in D.C. for us.
Yeah, I'm actually here to, I'm moderating the next debate, so that's actually really why I'm here. Just kidding. I think that's the last position I would want. And I don't have time because it was really a wildly busy day on the markets today. If you thought there was some tweets and statements going around yesterday that moved markets, holy smokes, we've got Nancy Pelosi saying stuff. Trump comes out and says stuff. I can't keep it all straight. We'll cover that. Plus, when we look at the U.S. shale side, oil rises really off some really U.S., some changing U.S. supply numbers, specifically off of Hurricane Delta, but there's also some international supply dynamics. We'll cover all of that. Natural gas has an okay day, but 12-month strip shows a really interesting story. Chevron's making people reapply for their own jobs. That'll be very interesting. Stu's got some stuff on the international news desk, but first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube, the best way to stay up to date on all of your energy market news. We look at the overall markets, then it's pretty choppy. Nasdaq, SPY, and Dow Jones finished 0.4, 0.3, and 0.2 points up, respectively. Really off the back of this, too. So in the morning, Nancy Pelosi tells reporters that she's not going to send the president any standalone bills for either airlines or virus checks in terms of the $1,200 review, which I thought was really fascinating. What was interesting is earlier that day, right before that statement, Trump comes out and says that he's still having productive talks. So this is great. 2 days ago, Trump tweets, I'm calling off all talks to the election. Yesterday comes out and says, I'll sign standalone bills. Today, he says he's still talking. Holy smokes, Stu. We really are living in just a news-driven article. And this is why if you are trading, not just crude oil futures, but ES futures, if you're getting in on little NASDAQ futures, guys, subscribe to a real-time news feed. This is the stuff that it picks up. You don't want to wait till 4:45 p.m. Eastern time to hear me tell you that Trump's moving the markets with his tweets. You need to know that in real time, so I highly recommend checking one of the. That's really the big thing that happened on the equities market. As I mentioned, SPY was 0.8 percentage points up. Nasdaq was 0.4 percentage points. Dow Jones finished only about 0.2 percentage points. But all of those indices trading at 1 month highs. We've only about 8 days in, but it's good to see over a 30-day range those stocks trading at a higher level. Crude oil had itself a really good day, 41.29. That's about 3.5 percentage points back into the curve. Looked really well. 2.5 percentage points. That's up to 43.26. Natural gas fairly flat on the front month curve, only about a percentage point on the upside. $2.63 back into the curve. Actually lost about 1/10 of a percentage point, down to $3.12. This is kind of an interesting is what you're seeing on that long-term demand side for natural gas. I think why you're seeing natural gas on the front month rise is just some of this Hurricane Delta stuff. I think there's also some other things leaking up. I think that's the biggest driver right now of natural gas, why you're seeing that kind of shift in the front month and that 12-month strip. When we look at XOP, the biggest gainer in all of our SP, or in all of the industry, our XOP contract up 4.3 percentage points, 45.55. That's $1.89. Just wait till we get to our biggest movers on the day. Holy smokes, it's some green numbers. OIH, which are oilfield services, 104.45. That's about 4.5 percentage points on the upside. When we look at, like I said, our biggest movers, we got to look at the downside first, though, before we cover the upside, unfortunately. Battalion Oil Corporation, 2% on the downside, down to $7.81. Lone Star Resources continuing to get sold off. They will be delisted October 13th, so get your shorts in while you can. I mean trades, not shorts, excuse me. Or was I kidding? I don't know. 25 cents on that one, down about 4.5 percentage points. American Resources Corporation. Man, I pledge allegiance to the flag of American Resources Corporation. They're down 18 percentage points, though, $2.12. On the upside, the big numbers, Stu. You talk about 1, 2, 3, 4, 5, 6, 7, 8 companies out of my 140 tickers that I watch above 20% on the green today. So just an unbelievable number. To give you an idea, SM up 20%. Houston American Energy Corporation up 20%. Sanchez Midstream Partners up 20 percentage points. Transglobe Energy up 22 percentage points. Transatlantic up 26%. Mexico Energy Corporation 30 percentage points. And Camber Energy Inc. up 78 percentage points. Somebody who invested in that better be having drinks tonight. Holy smokes. Stu, what do we have on the international news desk today?
I can barely keep my head squared on here. First thing, we've got Saudi Aramco coming out. BP said we reached the maximum production 2 weeks ago in 2019. Saudi Aramco came out today and said we expect demand growth to be in 2040. So you have BP, you have Conoco, you have Shell. They're all taking a left and going green. And then you have Saudi Aramco over here like this going, we're being the only one producing until 2040. I put my money on Saudi Aramco. Okay, then we have Next Era. Pretty interesting. They are now more.
This was wild. You sent me this. You sent me this morning. Wild story.
Wild story. Next Era, which is a green energy company, they are worth $145.5 billion. That's a few billion.
It's a couple billion between friends.
Well, that's a few billion between friends. Exxon's 141.6 billion, and Chevron is now 142 billion. Now, Exxon's shares have doubled 50% down this year.
You sound like a great IR guy with that. Our shares have doubled 50% down. That's a great IR phrase. I love it.
And Chevron, who is in the best position out of all the majors, they've only lost $5 billion this year. Okay, enough of that. Let's move on to ConocoPhillips. There's this wild animal out there called a wildcat. They're not extinct right now. ConocoPhillips has a Norwegian wildcat well they got approved for, and the rig is the Leif Erikson. And guess how much that bad dog costs a day to rent?
Oh, it's going to be over six figures.
$235,000 a day for the Leif Erikson. He's not a rock star. Okay, we're going to the next one here.
Imagine that insertion order.
The Chevron workers demand, you'd already touched on this. You and I would have to reapply for our own jobs. We wouldn't get it. Okay.
We got to cover that a little more in depth because I think there's a couple things on this one. First, Chevron is making all of their employees reapply for the same job they already had. We have a little guest in the back corner. If I reapplied for my job, would I get it? That's a no, folks. And I don't know. This is wild to think about. You have a job. Someone's going to make you you can really do whatever you want. What I think this hurts is the Noble employees, though. You're in that acquisition from Chevron and Noble. Guess what? All of that G&A is getting cut out of Noble. When I saw this story, my heart bled for those Noble people because, those are the guys that are going to be in part of the redundancies. When they ask about reapply for your jobs, well, they're trying to figure out redundancies, at least in my eyes. So that...
Unbelievable. I feel sorry for him.
It is brutal. I think we look on the U.S. shale side. I guess before we do that, is that all on the international side?
There's a bunch more coming around next week.
There is so much. We're waiting on all those peace deals. You've been doing a great job of covering all in the international news. As we shift over to the U.S. shale side, two things. One is obviously that Chevron thing. Very interesting. Could be some corporate jobs, actually. And I know when you do a lot of this reapply, a lot of the redundancies can come at that corporate level. So it'll be interesting to see how all of that plays out. When we look at, really what happened in the U.S. shale patch today, there's a couple things. One, I think it'd be remiss if I didn't cover why oil was up today. And there's a couple things. First, Hurricane Delta continues to flow in. Anyone who's in the Louisiana, Alabama coastline, our hearts are going out to you right now, because you're about to get pounded here. Hurricane Delta is expected to make landfall and de-strengthen, I went IR on us, de-strengthen from a Category 3 to a but still semi-powerful Category 2 that's supposed to make landfall October 9th. 91% of U.S. Gulf production is offline, or about 1.69 million barrels. As yesterday, there was 80% of oil taken offline. Oil markets dropped. Today, though, now I'm telling you 91% is cut off. Well, why is oil rising then, Mike? There's just, you're telling me two different stories. How do I keep track? Well, the key is deciding, are traders viewing the demand or the supply side? Because as we talked about, U.S. oil price is a function of supply versus demand. It's a pure price, or it's a pure supply-demand commodity. The long-term demand outlook for crude oil, I think, is set. I think if you talk to anybody, whether it's Rystad or buddies over in Inveris and Bernadette Johnson, any one of those guys, any one of these reasons, they'll tell you 8 to 10 million barrels has just been wiped off the market, and it's going to stay that way for a while. Just how COVID is affecting us. What is affecting the oil markets right now, and why you're seeing some days when you hear numbers come out that either affect demand, doesn't move the market, but when you hear supply numbers affect the market, that's what's moving markets. Why? Because the supply of oil and gas is going to be key. If we know demand is going to be capped we know there's 10 million barrels wiped off. Well, what so happens if all of a sudden we hear a simultaneous supply event, much like we know what's going on in Norway right now, Stu? It's up to about 900,000 barrels on this strike.
Yep. Oh, just over that.
Holy smoke! So now we're talking about another million barrels. That is a good number in terms of if you're a supply side trader looking for oil to move. So watch yourself. The demand side of the equation, I think, is pretty set. If you're looking to trade crude oil, make sure you're looking at the supply side, because that's still what's impacting this. And we look at some of the fallout that come from this. It'll just be interesting. Like I said, the changing U.S. oil dynamics. Kind of one of the other things I had, natural gas inventories came out today. We saw 75 billion standard cubic feet increase, which is bringing down those stock levels within normal range. It's partly why you saw that front month contract on natural gas rise a little bit. So good to see on that. I read an RBC Capital Markets note this morning that did a good coverage of private equity in oil and gas. And part of the reason why these numbers are hard to find is private companies don't disclose a lot of their information. Public companies, it's nice. 4 times a year, they got to tell me exactly what they're making. Private companies never have to do that. So I think these are very interesting, and specifically when you talk about private equity, it's private, so we don't know it. Dry powder, Stu, and for those of you wondering, dry powder is just the amount of capital available to go out and allocate to CapEx. In 2018, 90 billion. Today, 22 billion. Yikes. In 2018, there were 29 firms with $1 billion of liquidity to deploy. That number has now dropped to 9, and 281 PE-backed firms in 2018 have now dwindled to 153. Yikes, amundo, Stu. I mean, private. If you're on Twitter at all, ETF does, or EFT does not like private equity backed shale companies. They think and now when I read these numbers, is this a fact of just the changing price, the changing market dynamics? A little bit. I think there's also I'd be remiss if I said that some of these numbers aren't just a reversion back to the mean. Should we have had 281 private equity backed E&P management companies? Probably not. There's a couple, as I would say, bad management teams sprinkled among some really good ones. So, do I think 150 is maybe a little low? Yeah, but I do think 281 was a little high. So to say that all of this pullback from dry powder dropping, the number of firms with liquidity, and just the total number of private backed companies, that's dropped. There's a lot of reasons for it. Some of it's COVID. I do think some of it is what we would call a reversion to the mean. Stu, do you have anything else for the day?
Yes, one of the things we forgot to talk about was today came out, the EIA basically said that
I think I saw this report.
I'm trying.
It was something long-term supply, I think. I think Stu's actually conking out on us. That's not good. Stu left us. So with that, guys, we're going to go ahead and get out of here and let you get back to work, finish up your Thursday. We've got a question mark above me because I don't know what happened. We will see you guys tomorrow for the digital ticker. For Stuart Turley, who's no longer here, I'm Michael Tanner. We will see you tomorrow for the digital ticker.